If you are on Social Security or Medicare right now, you need to stop everything you are doing and watch this entire video, because what I am about to show you is not a coupon, it is not a discount card, it is not some gimmick from an infomercial, it is real federal money, real government programs, and real legal exemptions that are already funded and waiting for you to claim them right now in 2026. And if you do not take action before these funding cycles expire, you will keep handing the government and your county assessor hundreds or even thousands of dollars every single month that you are legally entitled to keep in your own pocket. And I promise you, before this video is over, I am going to show you something that almost nobody knows about. A rule buried so deep inside the Medicare and Social Security system that even most benefits counselors have never heard of it. And it could be the single biggest financial move you make this entire year. So stay with me, because the most important part of this video is coming and you do not want to miss it. Right now across this country, millions of seniors age 65 and older are paying bills every single month that they are not legally required to pay. They are paying their Medicare Part B premium out of pocket month after month. They are paying full retail price at the pharmacy. They are writing a check to their county tax assessor twice a year when they do not have to. And the reason this is happening is not because these people are uninformed or careless. It is because the Social Security Administration, the Centers for Medicare and Medicaid Services, and your county government will never reach out to you and tell you that you qualify for these exemptions. They are counting on your silence. They are counting on the fact that you will keep paying because you do not know you have a choice. That changes today. Let us start with the bill that is draining the most money from the most seniors right now, and that is the Medicare Part B premium. In 2026, the standard Medicare Part B premium sits at $174.70 per month. If you are having that deducted directly from your Social Security check, listen carefully, because there is a federal program called the Medicare Savings Program, and it has a specific track called the Qualified Medicare Beneficiary Program, or QMB. And if your monthly income is at or below approximately $1,262 per month as an individual, or $1,704 per month as a married couple, the government is legally required to pay your entire Medicare Part B premium for you. Every single cent. Gone. That is over $2,000 per year flowing back into your household, and all it takes is a single phone call or visit to your local Medicaid office to apply. Now, if your income is slightly above those QMB limits, do not go anywhere, because there is a second track in the Medicare Savings Program called the Specified Low Income Medicare Beneficiary Program, the SLMB. And if your monthly income falls at or below roughly $1,488 as an individual or $2,003 as a couple, the SLMB will pay your Part B premium in full as well. And there is a third tier called Qualifying Individual, or QI, that extends even further up the income scale. These are not secret programs. They are funded by your federal tax dollars, but they are first come, first served with limited enrollment windows, and the Medicaid offices processing these applications are not sending letters to your front door. You have to walk through that door yourself. Now let us talk about your prescription drug costs, because this is where seniors are getting absolutely crushed and do not even realize there is a solution sitting right there in federal law. The program is called Extra Help, and it is also known as the Low Income Subsidy. And in 2026, if you qualify for Extra Help, you will pay no more than $5.10 for every single covered generic drug on the Medicare Part D formulary, and no more than $10.35 for brand name drugs. Think about that. If you are currently paying $30, $40, $60, or even $100 a month for a drug you take every single day, that is a massive reduction in your monthly expenses. And Extra Help qualification is tied to income and resource limits that are far more generous than most people think. In 2026, the income limit for full Extra Help is roughly 150% of the federal poverty level, which comes to about $22,000 per year for a single person. Resources limits are around $17,220 for an individual, excluding your home, your car, and your life insurance policy. You apply for extra help directly through the Social Security Administration, either online at ssa.gov by calling 1-800-7721-213 or by visiting your local Social Security office. And here is something critical that most people do not know. If you already receive a Medicare Savings Program benefit, like QMB or SLMB, you are automatically enrolled in Extra Help. Automatically. So, if you got yourself enrolled in the Medicare Savings Program, you may have already unlocked Extra Help without even knowing it. Now, I told you at the beginning of this video that I was going to show you something almost nobody knows about, and we are building toward that. But first, I need to make sure you understand the IRMAA surcharge, because if you are not dealing with it right now, you may have a family member or neighbor who is, and sharing this information could save them thousands of dollars this year. IRMAA stands for Income-Related Monthly Adjustment Amount, and it is an additional surcharge that the Social Security Administration adds on top of your base Medicare Part B and Part D premiums if your modified adjusted gross income from 2 years ago was above a certain threshold. In 2026, the SSA is using your 2024 tax return to determine your IRMAA. If your income in 2024 was above $97,000 as an individual or $194,000 as a couple, you are already paying an IRMAA surcharge right now. And it can add hundreds of dollars to your monthly Medicare cost depending on your income bracket. But here is the rule: the SSA will almost never tell you unprompted. If your income drops significantly after that 2024 tax year, if you retired, if you had a reduction in pension or investment income, if a spouse passed away, if you experienced a divorce or other life-changing event, you have the legal right to appeal your IRMAA surcharge using a form called SSA 44. The SSA 44 is the Medicare Income-Related Monthly Adjustment Amount Life-Changing Event Form, and it allows you to submit documentation of your changed income so the SSA will recalculate your premium based on your current situation, rather than your 2-year-old tax return. This is not a gray area. This is written into federal law, but you have to request it. You have to fill it out. You have to submit it. Because the SSA will never send you that form on their own. Go to ssa.gov right now, search for SSA 44, download it, and if your income has dropped since 2024, you file that form immediately. We are now getting to the section of this video where I said the most valuable information was waiting for you, and I meant it. What I am about to tell you about property taxes is something that county assessors in almost every state in this country are not advertising, not promoting, and in many cases actively failing to communicate to senior homeowners. If you are 65 or older and you own your home, in the vast majority of states, you qualify for some form of senior property tax exemption, senior property tax freeze, or senior circuit breaker credit, and in many counties, the savings are not small. They can be enormous. In states like Illinois, the senior freeze exemption locks your assessed home value in place so that even if your home's market value increases, your taxable value stays frozen at the level it was when you first applied. In Florida, the senior homestead exemption can reduce your assessed value by up to $50,000 for low and moderate income seniors. In Texas, homeowners age 65 and older who have filed for a homestead exemption receive an automatic school tax freeze, meaning the school district portion of your property tax bill, which is often 60% or more of your total bill, cannot increase as long as you live in that home. In New York, the Enhanced STAR program for seniors can reduce your school tax burden by tens of thousands of dollars in assessed value annually. In California, the Property Tax Postponement Program allows eligible seniors to defer property taxes entirely until the home is sold or the owner passes away, and the state pays your tax bill on your behalf in the meantime. Now, here is what makes this so infuriating. In most counties across America, the assessor's office is not required to notify you when you turn 65 and become eligible. They are not required to mail you an application. They are not required to explain the savings on your tax bill. You have to walk into that office, call that number, or go online and apply yourself. And in many counties, these exemptions have specific annual filing windows. If you miss the deadline, you lose an entire year of savings. Some counties require you to reapply every year. Some require proof of income. Some have a one-time lifetime application. The rules vary by state, by county, and sometimes even by municipality, and the only way to know exactly what you qualify for is to contact your county assessor's office directly and ask. Call them. Ask specifically about senior exemptions, senior freeze programs, senior circuit breaker credits, and homestead exemptions for seniors. Bring your prior year tax return, your deed, and your date of birth. Do it this week. Not next month, this week. Because in many counties, the filing deadlines are tied to annual assessment cycles, and missing that window means waiting another full year while you keep overpaying. And while we are talking about bills you should not be paying, I have to mention LIHEAP, the Low Income Home Energy Assistance Program. If you are a senior on a fixed income and you are struggling with your utility bills, your heating and cooling costs, LIHEAP is a federally funded program administered at the state level that pays a portion of your energy bills directly. LIHEAP has income limits typically set at 150% of the federal poverty level, and in 2026, that means a single senior can have income up to approximately $22,000 and still qualify. Applications open on specific dates that vary by state, and the funds run out fast because it is first come, first served. Go to liheap.ahf.hss.gov to find your state's LIHEAP office and the current enrollment period. Do not wait. Now, I promised you the single most powerful rule, the biggest mistake I see seniors make, and here it is. The biggest mistake is not any of the 5 bills I just described. The biggest mistake is assuming that because you applied for Social Security, because you signed up for Medicare, because you registered for anything with the federal government at any point in your life, that the government has automatically enrolled you in every benefit and program you qualify for. That assumption is costing American seniors billions of dollars every single year. The Social Security Administration does not automatically enroll you in the Medicare Savings Program. The SSA does not automatically file an SSA 44 on your behalf when your income drops. Your county assessor does not automatically apply your senior property tax exemption when you turn 65. The pharmacy does not automatically apply your extra help benefit if you forget to present your enrollment card. The utility company does not call you when LIHEAP funding opens. Every single one of these programs requires you to raise your hand. And the government is counting on the fact that a significant percentage of eligible seniors will never raise their hand. They will keep paying, month after month, year after year. Do not be that person. Here is your action plan, and it is simple. Step 1, call your local Medicaid office this week and ask whether you qualify for the Qualified Medicare Beneficiary Program or any Medicare Savings Program benefit. If you do not know your local Medicaid number, go to medicaid.gov and use the state contact tool. Step 2, call the Social Security Administration at 1-800-772-1213 and ask whether you are currently enrolled in extra help for your prescription drug costs. If not, ask them to mail you an application or help you apply over the phone right now. Step 3, if your income has dropped since 2024 for any reason, download and submit Form SSA 44 immediately to appeal your IRMAA surcharge. Step 4, call your county assessor's office and ask specifically what senior property tax exemptions or freeze programs are available to you and what paperwork you need to file. Step 5, go to liheap.achs.gov and find out when your state's LIHEAP enrollment opens and get on that list the minute it does. That is it. 5 phone calls, 5 conversations, and the result could be hundreds or even thousands of dollars back in your pocket every single month for the rest of your life. This is not coupons. This is not penny pinching. This is your money. These are your tax dollars. These are programs that Congress funded specifically because people your age deserve to live with dignity and financial security, and you have earned every cent. If this video helped you, subscribe to this channel right now, because we release information like this every single week, and I do not want you to miss a single update, especially as these 2026 program thresholds and deadlines shift throughout the year. And do me one more favor. Share this video with one neighbor, one family member, one friend who is on Social Security or Medicare. One phone call to a Medicaid office or a county assessor is all that stands between them and a massive monthly raise. And you could be the person who changes their financial life forever by forwarding this video right now. I will see you in the next